Now the spreadsheet's actually a pretty handy little device here, and what this will help you do is help identify how losses actually affect your account. So let's say, for example, that we start off again with a $10,000 account, and our brokerage charges us $10 for an entry and $10 for an exit. Underneath the maximum risk, we can put in the amount that we'd be willing to risk per position. So let's say, for example, we take the program's recommendation, which is 2%. We can see how that would affect our account. Now, what these numbers are showing us over here on the left-hand side are the number of losing consecutive trades. So if we lost this number of consecutive trades in a row, we could find out exactly how that would affect our account. So let's just take a look at the first one. And the first one is saying that if we lost 2% on our account, we would have had trading losses of $180 plus $20 in brokerage fees, $10 entry, $10 exit, for a total loss of $200. That would draw our account down to $9,800. We'd have 98% of our account left, and we would have lost 2%. So these numbers again over here on the left hand side are consecutive losses, and we can see how this would have played out. So for example, if I had 20 consecutive losses losing 2% on every transaction, my account would be down to $6,600, and I would have 66% of my account left, and I would have lost 33%. So if I scroll down here just a little bit further, you can see that on trade number 35, if I had 35 consecutive losers in a row, that's the point where I would have lost 50% of my account. So now let's go ahead and take a look at another calculation. Over here on the right hand side, let's say that we're willing to risk a little bit more. And let's say we're willing to risk 5% on every transaction. Let's see how that would affect our account. So if I enter in the 5 in that box, hit my enter key, you'll see how that would have played out. And in this case, if I would have had, for example, 14 losing trades in a row, that's the point, if I was risking 5% on every transaction, where my account would have lost 50% of its value. So taking a look at this information and seeing how these percentages affect your account can be really eye-opening if you haven't done this before. And to take this a little bit further, this box right here, this will help calculate how much you need to recover if you lose a certain percentage. So let's say, for example, that we lose 20% of our account. What this will calculate is the return that I would need to get in order to get that 20% back into my account. And this number grows exponentially. So if I lost 20%, I need to get 25% back. Well, if I lose 50% of my account, now I need to get back 100%. So the point being is that it's extremely important to manage these losses. We can't let these losses get away from us, because if we dig ourselves a deep enough hole, we're going to have a heck of a time getting out of that hole. Now here's another spreadsheet that's included for you. If you click down here at the bottom, called Compound Growth, this is how much your account will grow based on different percentage levels. So again, let's say that we're starting off with a $10,000 account. And let's say we manage a modest 2% growth per month. It doesn't sound like much, but let's go ahead and enter it in and see how that affects our account. If we were able to do 2% in our account per month, over a 1 year or 12-month period, our account would be up to $12,682 for a return of 26.8%. That's just coming back with a 2% growth rate. So now let's play around with this for a little bit, and let's say that we were able to achieve a 5% growth rate per month. If we were able to generate a 5% return on our account every single month, you can see how this would affect our account as well. And after 12 months, our account would now be worth almost $18,000 for an almost 80% return. And this again is an important thing to understand, is that we don't have to hit home runs every time. If we can consistently make a decent return on our account, it can really add up over a period of time. So this spreadsheet is included with your program, so take a look at it. I think it can be really helpful.